right, so let's bring in Tom Lee. Tom, what do you make? I mean, how much does the Fed really matter to the equity markets right now?
The Fed still matters a lot because they are the most powerful institution in the world. And it matters because monetary policy relatively tight has kept the ISM below 50 for 31 months. And so corporate America has operated with a bit of caution, keeping the car in low gear because they didn't know where inflation was going to be and they didn't know where monetary policy was. So I think when the Fed begins to ease, it's not just a move in interest rates, but it's a green light for corporations to get more confident. And as you know, the ISM moving above 50 does not only revive economic activity, it probably also rejuvenates the labor market, which has been sluggish for what looks like more than 12 months.
So does that mean if the Fed stays dovish or keeps cutting, that there's other newer legs to this pretty remarkable stock rally?
Yes, and I might even say that I think that we could have growth recover without inflationary pressures. I think reflexively, people the last few years think growth picking up means there's automatic inflation. That has not been the case for 25 years. But I think if companies begin to expand, plus the fact that we know AI is driving productivity gains, and that's really a big tailwind for businesses, and then we know that there's initiatives around Wall Street boosting productivity because they're going to build on the blockchain, I think there's a path for growth to be stronger next year without a pickup in inflation. That's going to be very good for profits and for equities.
Yeah, and listen, we've talked about it many times, Tom, and I know you've talked about it with Scott and others as well. You've been long, you've been strong, you've been correct. But is there, at some point, does this market take a breather? It's getting, listen, as a 401k holder, I like it. But as a TV analyst who's been doing this for almost 30 years, I'm starting to worry about it a little bit.
Yes, I mean, a pullback is going to be inevitable. But from a timing perspective, sentiment still remains staunchly negative. So, I think that the gold standard is the AAII, net bulls, less bears. That's been 6 consecutive weeks where it's negative. That's never really marked a market top. I mean, that has to flip positive and sustain for several weeks. So I think if we're going to say between now and year end, could the market pull back? I'd say it's possible, but to me, it's probably from higher levels. I think there was a lot of skepticism about even yesterday's FOMC. I had a lot of clients tell us they thought the stock market would sell off because 25 was priced in. But because almost everyone told me that was the consensus view. I think people were cautious into yesterday. And that's why we're seeing the groups that should rally big, like the small caps and the cryptos and the financials and even the Mag 7.
Tom Lee, we're going to let you go, but always appreciate you coming on, Tom. Thank you.
돈 벌게 불어나란 내